Good morning. It's January 19th, and today we're going to go right to the Longbow Dashboard. And everyone's probably thinking, okay, we had this big run up in the markets early here in 2023. Now we're seeing softness, but we're seeing some data that used to get people excited, like softening retail data, softening industrial production data. So you remember when bad news was good news in 2022? Well, it's seeming like bad news is bad news here in 2023. So I'm going to jump to the dashboard and say, okay, well, what are two things that I know that you're looking at? One is the ETF for the S&P 500, which is the SPY, and the other one is the TLT. So obviously treasuries here, so 20-year treasuries. And interest rates have been driving the returns of the markets, inflation obviously driving interest rate expectations and actual interest rates, which affect businesses, consumers, stocks, risk assets. So we're going to look at these two, but what I always like to do is say, well, what else can I use to the platform that can make sense of this? So I'm also going to hit the top 25. So I'm going to actually go there first before I delve into those two securities. And I'm going to scroll here, is take a look at who's on the right-hand side of this page, which is the highest trading range odds to the downside. So these securities would have downside. And in terms of things that rhyme, EDV, long duration treasuries, the TLTs, one of the things we're looking at, right? IEI, so that 3 to 7 year treasury. So you're seeing a lot zeros, right? Zero coupons. So you're seeing a lot of things that rhyme here on this side. So that means that those securities are either at or nearing the overbought territory relative to the trading ranges. That's really different than the left side, which means that they're oversold or near oversold, and they have a much higher odds of doing better. So I'm going to go back to the two that we were looking at before. So let's look at the SPY here and say, well, what would I be looking at knowing what we've just seen on the top 25 and relative to the TLT, right? And so I can see here that it's still in the middle of the range. That white bar is between the green and the red. My odds are 4 to 1 on the upside. So that's good, right? And that makes sense because you're lower on the trading range near the bottom versus the top. So the upside is going to be positive versus negative. And I'm still on this KISS view here. So I can see that the short-term momentum's bullish, medium-term momentum's bullish. So that looks positive. But the low end of the trading range is going lower. The high end of the trading range is going lower. That's not great. So I'm going to look at the SPY here and say, oh, sorry, here. I have to get off KISS view. That's something you'll learn. Is then you click on the ticker. So in case you've made that mistake before like me. And now you can see the trading range. And so what we're seeing here is that this is heading lower. This is heading lower. Remember we talked about yesterday how the band is getting bigger. And so when we see that here, I'm thinking like, okay, maybe there's going to be a risk change setup. So I'm going to be a little bit more careful, even though it's short-term bullish, medium-term bullish. I'm going to be a little bit more careful on this. But I do see high short interest ratio. So that means that people are short the security. So that does give me comfort. I'm looking to go long if this hits the bottom end of the trading range. So those are the kinds of things that I would look at. And the applied volatility discount is kind of near nothing. That's why you're getting a neutral signal. But I'm looking at that for the S&P after what looks to be now a couple down days in the market. But I'm going to compare that to the TLT. Remember, that was on the right-hand side of that sheet, along with other treasuries, long-term and medium-term. So I'm going to click on that. And as we can see here, it's nearing the top end of the range, right? So again, bullish, but it's at a discount. So people aren't too worried about this security. So if it's near the top end of the range and people aren't worried, maybe you should be if you're an owner and thinking about entering it. Probably better if you're looking to short it, although you don't really want to short things that are bullish in nature, unless you have a real fundamental view going against it, why it should turn. But here I'm taking a look at the TLT. It's nearing the top end of the range. That's something that I would be a little bit wary of. So what does that tell us here? It says that when rates are going down, or and the expectations are going down, these securities are going up, because when bond yields go down, bond prices themselves go up. And so this is nearing the top end of range of people thinking that, whether that, because of this negative information about, retail spend or industrial production or slowing growth around the world, obviously earnings season are coming out. The banks have had a lot of information about that. There's tech cuts and the like. People are saying, yeah, maybe they won't hike as much. That's been a lot of the narrative up to the last couple of days when people are maybe a little bit more worried, and that's what you're seeing in today's action in the market, that, gosh, maybe the Fed's going to keep hiking or the ECB is going to keep hiking into a slowing economy because labor stayed pretty strong. And so when I see something like this, if I've been an owner, it doesn't mean you just go out and sell everything, but you could consider if it's going to get to the top end of the range to maybe trade that. We're seeing a long bar core signal of neutral. So that doesn't really say much to me. But again, remember we talked a little bit here, when you turn it on KISS view, one of the interesting things you can see is the low end of the trading range is getting higher. The high end of the trading range is getting higher. So actually that security is moving up. The channel of its trading range is moving up, and that's a good thing if you're looking to go long. But this isn't the time that you'd be putting in. Your odds here obviously are negative because you have more downside in the range versus upside. So that's why we would put together a couple of the different tabs, from individual securities, how to look at it, and also making sense of patterns in the top 25. If you have questions, just let us know, and I look forward to talking to you tomorrow. Bye-bye.